Well, hi guys, welcome to this Money Control live stream. I'm Nandita Khemka and you're watching Opening Bell right here with me on Money Control. Of course, it's a Friday morning after yesterday's crash. Let's hope it doesn't turn into a Friday for the market. Yesterday we broke below crucial support levels. In fact, we ended below that 22,000 mark. That was a very crucial level that was being watched out for by the market. And India VIX, that index once again jumped over 6% in yesterday's session. So that's the kind of volatility we are staring at ahead of that June 4 event. Global cues are fairly supportive and the GIFT Nifty is hinting at a mild pullback after yesterday's thrashing. But the issue is more local. Election jitters are weighing in on the market. So so far we have been ignoring positive cues because the Dow has been up for 7 straight sessions, and throughout the week we have seen bouts of correction, and there was no buying support coming in at lower levels as well yesterday. So we'll have to wait and watch as to how we manage to fare throughout the day. A positive close is very crucial to say that this bout of selling may actually be over. But of course, lots lined up over the next half an hour. We'll be talking about lots of stocks in focus, individual movers, SBI after good numbers, Cipla will be reporting. So lots of stocks in focus. Also your stock related queries, keep them coming in on our YouTube feed. We'll try and take them up with our technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Well, Wall Street is on track for weekly gains as the Dow gains for a 7th straight session after weekly jobless claims data offers fresh hope for interest rate cuts. European markets rally with FTSE hitting a fresh record high after the Bank of England holds rates at 5.2%. In fact, Asian markets are trading higher while the GIFT Nifty is suggesting a positive start for us after yesterday's drubbing. Crude prices hit a one-week high above $84 a barrel as demand expectations rise. Gold too gains on hopes of a rate cut. After posting record quarterly profit in Q4, SBI Chairman Dinesh Khara says that he expects advances to continue to grow at about 16% going forward. Also says that the cost of deposits has plateaued and that they will expand the net interest margin. Among key earnings to track today, a mixed Q4 is seen from Tata Motors as the domestic commercial vehicle segment slows. Eicher Motors is also expected to report strong profit growth and higher margin in the fourth quarter. Also watch out for Cipla's numbers. Well, we have just about 9 minutes to go for market open. We'll have to see whether or not we see a positive open this morning, whether we see some green on the screen on the first tick or not. But let's take a look at the cues for trade today. Of course, benchmarks logged their worst session since January 2023. In fact, the Nifty is at a 2-month low. The BSE listed companies have erased a market cap of nearly 7 lakh crores on Thursday. And of course, we ended below that 22,000 mark, down 345 points on the index. In fact, yesterday's swing low was 21,932. That was the swing low that we made yesterday. We'll have to see whether or not we hold up and we do not manage to breach this level on the downside. VIX closed up almost 7%. If you look at the FNOQs, the open interest on Nifty was up 14.1%, added 15 lakh shares. The May futures are trading at a 118 point premium vis-a-vis 91 point premium, and the Nifty Bank open interest was up 8.8%, adding 1.1 lakh shares. The Nifty put call ratio has jumped to 0.9 vis-a-vis 0.77, and stocks in FNO band, there are no new additions, but a whole host of stocks like SAIL, GMR Airports, Balrampur Chini, Aditya Birla Fashion, Vodafone Idea, PNB, Z and Piramal Enterprises are some of the stocks in the ban. FI net sell figures, elevated almost 7,000 crore worth of selling in the cash market. In fact, in May alone, FIs have pulled out nearly $3 billion. So that's the kind of FI outflows we've been witnessing. But, of course, to take stock of how we are set up for today, let me bring on board our guest for today. Joining me is Raja Venkatraman of NeoTrader. Raja, always a pleasure talking to you. Crucial support levels have been taken out on the downside. What is that key support level you'll be watching out for in today's session, and do you think there could be some bit of buying support that could come in at these levels? Because in the previous on the previous days when we've seen such a sell-off, towards the end we've always seen buying support come in at lower levels.
Yeah, good morning Nandita, thank you for inviting me to the show. So first of all, let me tell everyone that what we are witnessing right now is election driven panic which is being spread amongst the other social media channels. Nothing is there which is so evident that the current government is not going to be formed, which is quite healthy for the Indian markets. But then this is the case with every pre-election rally or decline, and this is going to continue to bother all the market participants. Now, looking at the kind of numbers which are being discussed, debated, and argued over social media, over the news channel, it continues to echo that the current government would step in and things would become much better. Until then, these kind of reactions have to be absorbed, and this kind of reaction has to be accepted and traded with. Now, the choice is you can stay away, or the second choice is, of course, participate. So now, considering the decline which has happened over the last 5 trading sessions, based on the kind of movements which I have seen and the kind of supports which are being shown by the option data, where the PCR has reached a good support threshold, right? It's got into the oversold territory. You're seeing good supports on the technical parameters as well. So you can expect a bounce back from here. Now, will this bounce back edge towards the new high? It's quite uncertain, because despite the positive results, like yesterday, SBI was a saving grace. Today, maybe it could be Tata Motors or Cipla, and positive numbers are coming in, but then the result season continues to be mixed. Now, looking at the markets and the kind of supports which I was envisaging, the Nifty spot has definitely reached an important support. I track the Nifty spot because it gives me a more fairer idea about how the markets are poised. And I would continue to echo that Bank Nifty since the last 1 month has turned around, and it will continue to play a big brother role here. And I'm sure that it is going to herald a recovery in the markets. And we have already been hinted by the GIFT Nifty that a positive start is on the cards, and that clue will definitely be taken by Bank Nifty. And I feel that today Bank Nifty would play better up, and those who are looking to buy on the index to definitely wait for the first half an hour and trade on Bank Nifty, because I definitely feel that that's going to take the market up. And I see, based on my time cycle studies as well, that the next 3 to 4 days are going to be on the positive side. So those who were giving up on the bullish bias should definitely reconsider, because the market is on the brink of a turnaround.
All right. Of course, next 3-4 sessions could be in the positive zone according to Raja. But Raja, in that case, what should one be buying in this market? In terms of stock recommendations, what would you say?
Yeah. So first of all, we have seen that the auto space has shown some positive trend. So I would look to go along with Bajaj Auto at the current levels, with a stop loss at 8800 for a target towards 9050 and 9100. And the other stock which I would like to go long is Industar. I'm taking a look at stocks that have come into supports after the recent decline, and but still have good room for upside. So Indus Tower is one such. I would recommend at the current levels at 330 with a stop at 325 for a target towards 335 and 340.
All right, those are the recommendations. But how would you be reading SBI on the charts? You know, brokerages have given a thumbs up to earnings, and rightly so. You also mentioned that numbers were pretty strong, and that was among the saving grace, in yesterday's session. So it has already hit a 52-week high. Would you say that it is giving out overbought signals, or do you see, more, upside on the charts?
See, as far as the PSU banks are concerned, they had never stepped into the overbought territory. And SBI per se has been a good buy on dips candidate. So any dips, if you can see in SBI towards the region of around 780 to 790, I would say that that would be a good buy opportunity for SBI rather than trading it at a breakout.
What about the OMCs? Of course, they were in focus because of the bonus issue announcement which has come by. And for BPCL, the street believes that the numbers are pretty good. So OMCs, between HPCL and BPCL, which one would you prefer?
Yeah, what we saw yesterday is that despite a positive number, the prices did not respect, and they were actually discounted. So I think that BPCL also could be in a similar trajectory. So at the moment, the OMCs have to be discounted because they have slipped into a sideways phase, and I would not be buying into the OMCs at the moment.
All right, not buying into the OMCs at the moment. But what about Cipla? Numbers will be coming out today. Dr. Reddys and Lupin, they were punished for the slowdown that they have seen in the US business, and that reflected in the numbers as well. For Cipla in particular, numbers are expected to be steady. US sales are likely to be strong. In fact, net profit is expected to jump on a low base as well. We are working with the revenue figure of somewhere around revenue growth figure of somewhere around 8.5% on a YOY basis. On the charts, ahead of the numbers, would you be looking at a trade?
Actually, the Cipla is showing some weakness here, and if the results are in line or not as per estimate, then I think that this stock could be punished. So do not look to buy into Cipla at the moment. In fact, looking to go short, then this could be a good candidate.
All right. Another stock that is in focus is Relaxo. It came out with its numbers. The stock has been stuck in a downtrend. Of course, we've seen profit down by 3% and revenue also down over 2%. Margins, however, saw an uptick on a YY basis. But if you look at the charts on a YTD basis, negative returns obviously not participated in the up move that the broader market has seen so far this year. Is this an avoid, Relaxo?
The stock has been in a decline for almost a year now, and I don't see any signals of recovery in play. So in such a scenario, it is better that we look at some other setup and take a trade. So it's an avoid.
All right, it's an avoid at the juncture, but hold that thought, Raja. We are just about heading into market open. The pre-open rate suggests that we could see a green tick on the screen. Of course, global cues are fairly supportive. GIFT Nifty is hinting at a mild rebound, of course, yes, the first tick has come, and we have started the day, with green on the screen. Thankfully, 22,000. We are around about that level right now. Mid and small cap indices are also in fine fettle, with the mid cap index up somewhere around 0.4%. Sensex is up a good 100 points, so 72,500 is the level that we are witnessing on the sensex. If you look at the breadth, it's right now it's in fine fettle. The advanced decline ratio is in fact tilted in favor of gainers. In terms of sectoral performance, let's take a look at the Nifty Bank Index. It did start out in the green, but has slipped into the red now, marginally so, but the Nifty Bank Index is trading with a negative bias. Aside of that, let's put up the auto pack. Yesterday, auto was the only sector that was in the green, when we saw deep cuts across sectoral indices like oil and gas and the likes. So yes, strength in the auto index today as well. 0.7% higher for that index. Let's pull up the metals pack. Yesterday, that metal index had shed somewhere around 2% or thereabouts. Let's see how metals are doing. Yes, a good 1% uptick coming in on the metal index as well. Let's also see what the oil and gas index is doing, because crude is at a 1 week high. The Brent crude is above that $84 per barrel mark. So we could see some bit of pressure on the Nifty energy pack as well. Pull up that chart. Yes, no, but yeah, we have seen strength coming in on the Nifty energy pack as well. So across the boards, gains coming in. The Nifty Bank Index, however, is a little flat, flitting between gains and losses. Realty, I also want to see what the Realty pack is doing. Let's see what the Realty pack is also doing. Yesterday, the Realty pack also saw a 2% cut. So yes, mild gains coming in there. So all in all, we are witnessing a positive start. Most of the sectors are trading with gains, and the broader markets are also in fine fettle. But we'll have to see whether or not we manage to maintain this momentum throughout the session or not. Taking a look at individual movers, BPCL, top Nifty gainer, almost 5% gain coming in. Yesterday, the numbers came in pretty strong, and we have bullish reports coming in from some of these brokerages as well. So reacting to that, 5% uptick for BPCL. NTPC is another one. ONGC, some of the metal names like Hindalco, Coal India are doing well. Power Grid, among the gainers, and so is Tata Motors ahead of its earnings. Bajaj Auto, JSW Steel, Adani Ports, these are some of the other movers. SBI extending gains, another 1% up for this particular stock. Aside of that, if you look at the losers on the flip side, Infosys is the top Nifty loser. Some private banking names also among losers like HDFC Bank, Britannia, Tata Consumer, Tech Mahindra, TCS. So entire IT pack seems to be under pressure today, and some names from the pharma pack also not doing all that well. Asian Paints also, post muted show or disappointing show in the fourth quarter among the losers today. Kotak Bank, HDFC Bank, all of them in the red, and IT seems to be the one pocket that's not really seeing any kind of rebound this morning. Raja, from the IT pack, Infosys top loser. Any strategies here?
See, the post the results, Infi has never really managed to come up the curve, and what we are seeing today is a sharp sell-off right now. So what I would do is I would first wait for the first 15 minutes to really take cognizance of what's happening. And like we spoke earlier, if market is due for a rebound, so I would in fact look at some stocks that are recovering from lower levels. We had discussed about Bajaj Auto, and it's trading 1.5% up. Now the other stock which I mentioned, which is Indus Tower, that is also amongst. It has started off well, so I would say that stay on the long side today, because today is not yet a short candidate yet. So I will wait for the first 15 minutes, take a cognizance of what's happening, because currently the market is not respecting any sentiment here, and all of us are being thrown off guard. So it would be best to wait and watch, and that's the approach which I would maintain even with Infosys.
Right, that's the view on Infosys. But, gold loan firms in focus, of course, after RBI's cash loan advisory. Yesterday, we saw Muthoot and Manappuram react, quite negatively to that. This morning, Muthoot has seen a mild rebound. It's trading in the green right now. But on the charts, after the kind of selling we saw yesterday, do you think there's a case to buy? Of course, it's Akshay Tritiya today, so wishing you and our viewers a very happy Akshay Tritiya. So let's discuss these gold loan, stocks as well.
Yeah, so wishing you also a happy Akshay Tritiya. But right now the market scenario is not very happy, and as you can see that the market has given up the initial gains, and we are actually again coming to a stalemate situation. So now Muthoot Finance, yes, the charts are showing some signs of stabilization, and we can see a oversold bounce here, but then the charts continue to exhibit some weakness. So I would not be hurrying into buying Muthoot Finance right now.
All right, in no hurry to buy into a Muthoot Finance right now. Hold that thought, Raja. We'll come back and talk about viewer queries and other buzzing stocks as well. But, as we are speaking, the markets have almost, given up all of the gains. The mid-cap index has also turned into the red. So, any mild recovery that we are seeing, we are failing to hold on to those gains as well. But, let me also bring on board, Daljit Singh Kohli, who's the head of research and strategy at Vasuki India Fund. Daljit, great to have you on the show. In a matter of days, the Nifty has shaved off 3.5% from all-time highs. We've seen a significant erosion in market cap of BSE listed stocks as well. Are you surprised by the pace of the correction? And do you think the dust will only settle after the June 4 verdict?
Yeah, good morning. See, in case of surprise, one would say that this was expected, that we had such a strong rally for quite some time, one-way rally going, and I think 10-15 days back, all of your channels, everyone was talking about that there is too much of complacency set in when VIX was around 10 or so. So people were talking that we are just going with one view that the current dispensation will continue, political dispensation will continue, and there is no fear amongst anybody. I think to that understanding, the market is responding this way, that actually it's such a major event cannot go unnoticed, and we will see some kind of volatility. In our view, this is just a temporary phase. Maybe because of polling percentages and all of that, some kind of nervousness is just kicking in. But in any case, the market is going with the consensus view right now is that current political dispensation will continue. And only difference will be the margin of victory. So if margin of victory changes, even then it doesn't make much difference, because finally if they are the ones who are going to hold the fort, then the policy continuity remains there. So market will be more interested in the long term market will be more interested in continuity of policy. I think that is what is given right now. As of now, nobody is believing or nobody is building in that case that there will be any change in that. So if that is the situation, then I think these kind of corrections are just kind of hiccups in the long run, and we should just, if you are a long-term investor, just stay put. Like for example, in our case, we have not done anything in the last 1 week, 15 days, anything, not even single share we have changed or done anything on that kind. So we just watching the market and waiting for that this temporary phase to get over.
Right. I also want to talk to you about the broader end of the markets. We saw some correction in March after the SEBI observations. But after that, mid and small caps made a very good comeback. But in this leg of the correction, we've seen a sharp cut of somewhere around 7% from all-time highs for the small cap index. Do you think there's some more froth that needs to clear up from the broader end of the markets now?
Yes, that is there. No, there is. We can some stocks we can easily see which are trading at 90 times, 100 times, 120 times of P multiples. So those are the places where you have to be cautious. So ultimately, in the whether you are making money in short term, long term, wherever, in investment you have to be careful about the valuation. You cannot deny valuation, or at any price. That era of buying at any price will not work now. So we have to be very careful about the valuation. There was froth built up in certain sectors, certain segments of the market, the small caps especially. Some of the SMEs I see, they are just mind-boggling numbers. No? Very, very small companies were trading at phenomenal valuation. So those kind of things one has to avoid and one has to be very cautious.
Let's talk about earnings now, Daljit. Of course, majority of the companies have reported their numbers. Talking particularly about the banking pack, right? Private banks have done well, and so has the biggest PSU lender of the country that reported numbers yesterday. Stunning set of numbers from SBI as well. But post the fourth quarter earnings, which way would you tilt? Do you think private banks are looking more attractive from a valuation standpoint? And would you say that PSU banks have already seen, a lot of run up, and the valuation comfort there is missing?
Both the points are valid. PSU banks have seen a lot of run up, and so there is limited scope of further movement. No? So they have already reached. Now, at the best, what we are expecting is PSU banks will continue with this kind of momentum, and with this kind of valuation stability will be there. So they will grow as much as like 10-12% kind of growth. System growth is 15-16%. Some of them will grow at 14%, 12 to 14% in our understanding, and that will mean that their ROA will remain stable, which will warrant no further derating, but not too much of a scope for re-rating also. So these guys will continue to perform with the market. In case of private banks, there is a scope of improvement on numbers, because like if you see quarter four, all the big banks, private banks, they have not shown any growth. And that is purposely. They didn't want to do it because of maintenance of loan to deposit ratio and capital and all of that thing. They wanted to maintain margins. So they have not grown on their own wish. Now, if they start growing, obviously they will have potential to increase their return ratios, increase their ROA, etc. And valuation wise, private banks are trading at lower end of their valuation cycles. So, which means there is a scope there. But will we jump immediately to the private banks? I think maybe we'll have to wait for 3 or 6 months more, because one, that they have to show that aggressiveness. The banks have to themselves show. Second, the biggest private bank has its own issues of merger, and so that technicalities will have to work out. So there will be little problem there. So the other big bank has got RBI issues very recently. So you have to, there are some specific issues to this particular company, and there are certain sector things. So we have to wait for some more time. The second thing, in our opinion, is that PSU banks will be big beneficiaries of corporate capex whenever it starts. And that means that these PSU valuations will remain there. So that is why, as of our now, as a disclosure, currently our portfolio is tilted towards more PSU banks. There are 1 or 2 private banks and smaller NBFCs, but more tilted towards PSU bank, because we are building in for the corporate capex, which will be a story played by the public sector banks. Private banks will be second in.
So, what about NBFCs then? In the wake of regulatory action by the RBI, and of course also the draft provisioning norms for project financing, that had also come as a negative setback for the companies. We saw sharp reactions on shares, right? Yesterday, for example, we saw Muthoot and Manappuram reacting to RBI's advisory on cash loans. So, in light of all these regulatory actions, would you steer clear of NBFCs now?
No, there is no need to stay clear of NBFCs. NBFCs will have their own role to play, and they are doing important activity there. MSME financing, and those, if India has to grow, MSE financing has to grow. So there is no question of that. Now, see, regulatory overhang will be the norm of the day. We have to go for, as the economy matures, the compliance, etc., will have to mature. So companies will have to fall in place. There is no question. There is no doubt about it. If I draw an analogy to pharma sector, which I have been tracking for many years, I see that there the companies have come. They've understood that if you don't follow US FDA regulation, then you are not in the game. So same way, if you don't follow RBI regulations, or if you have some problem there, you will not be in the business. If you have to fall in place with compliance. So that, I think, market understands, the companies understand. There are initial hiccups, there are some regulatory actions taken on some companies, but I think they are all responding. The good part, or the ray of hope which I have taken, is that the issues have been resolved in 6 months. Like in case of Bajaj Finance, disclosure, we are not invested there. Just that they have been able to resolve the issue in 6 months. So if companies are able to get over the compliance issues in a shorter duration, and then it is good for the sector in a longer term also, because the sector becomes robust, the companies become better in compliance. So it's in a way, in a longer term, it is a good thing. So I think the NBFCs will have their role to play. We are holding 1 or 2 NBFCs in our portfolio, and we feel that they will also they will keep on giving us good returns over a period of time.
All right. So last question really, since you mentioned pharma sector, help us understand the report card a bit more in details. For Dr. Reddys, there was a quarter-on-quarter decline in the US business, and pricing pressure is still there. I mean, that's what we could make out of the commentary and the overall numbers that came in from Dr. Reddys. Would you be disappointed with the report card that has come in from the pharma sector, or would you say that was largely on expected lines?
No, there is no question of disappointment. Numbers are mostly in line with the estimates everywhere. I think some places or some analysts would have built in a little more aggressive numbers, so they might be disappointed. See, the $10-20 million here and there is very much expected. In case of Dr. Reddy, what you talk, like 420, 415 number was expected, and they did 391. Now, you can't go precise up to the last 2 digits. No? So it is very much expected that $10-15 million here and there is possible. But the question about pricing erosion, that will always be there. There is no way that you can avoid that pricing, because the more number of competitors come in, the more approvals will come in. You will see that happening. But we have to see how the company is able to negotiate that. Are they able, and what kind of pricing environment is there? See, for last 2-3 years, there was a double-digit erosion. In last 6 months, that double digit has come to single digit. Now it is stable, no more further decline. 4-5%, 6% decline is there in the base products. So and that can be made up by new launches, by better complex products, etc. So there are levers for companies to play on that, and they can take care or negotiate this pricing environment. We will never see a situation where there will be no overhang from FDA, where there will be no pricing pressure. These things will remain with the industry, but companies will have to negotiate, and the guys who negotiate better, they will get a reward in the back.
All right, that's the view then on the pharma space. But with that, Daljit, I'm afraid we are running out of time. But I want to thank you for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure chatting with you this morning.
Thank you.
Well, with that, let's go back to Raja, who's been waiting by. Raja, let's take up some viewer queries that are trickling in this morning. First and foremost, I can see a query coming in on LNT from Srinivas. He wants to know how should one navigate. Of course, yesterday we saw a sharp downtake on the back of margin disappointment, or margin guidance had disappointed street. Would you advise buy on dips, or would you say that if you see some bit of an uptick here, maybe partly sell your shares?
Yeah, see, right now L&T is under some pressure, and I would not be a buyer in L&T right now. Instead, you can focus your attention on the banking. We have discussed about the Bank Nifty taking a lead, and that's what is happening right now, buoyed by the SBI results, and the private banks seems to be faring much better. So I would be a buyer in the banking space and not get into L&T right now, because L&T is definitely under pressure.
Another stock that's under pressure is Intellect Design. A 13% crash on this particular stock right now. Tanisha Jain wants to know what to do with this stock. Should one use this as a buying opportunity, or would you say that don't really do anything about it right now?
Currently at the moment the stock is actually showing signs of further declines, and in such a scenario it would not be advisable to buy into, because its immediate set of supports have all been given away. So if you are holding this stock, can exit part of your position, wait for today's low to be given up, and exit the balance as well, because the situation is not turning to be a good one. A gap down opening and a severe gap down, so gaps will be used as a resistance to exit. So that's the trajectory one has to follow, because this stock is definitely going for some pain in the days ahead.
All right, that's the view on Intellect Design. Hope that answers your query. The next query is coming from Adit Taneja. Wants to know your thoughts on IFCI. In fact, he bought 50 shares of IFCI. He hasn't really mentioned his buy price. In fact, he's bought shares at 50 rupees, I beg your pardon. Hasn't mentioned the amount of or number of shares that he's bought. He wants to know the target and stop loss here. Now, IFCI has seen a very good move in the last 6 months. The stock has doubled. Would you advise him to buy more on any dip?
Yeah, right now IFCI is undergoing a consolidation. There is no signs of any kind of momentum emerging to the upside. So I would be a careful buyer here, because currently if I were to buy, I would buy on a breakout, because that will signal that the overhang is gone away, and also it will trade above an important threshold, which is a level of 55. So once it crosses 55, you can start buying IFCI again. Otherwise, it's an avoid from my side for now.
All right, that's the view. The next query is coming in from Abhishek Singh. Wants to know your thoughts on Tata Power. Of course, the stock has shaved off almost over 10% in the last 5 sessions. Should one book profits here if they are sitting on profits?
Yeah, if they are sitting on profits, then it is a time to exit Tata Power, because the momentum has definitely fizzled out. So I would wait for some bit of recovery, and then I would buy into the stock again.
All right, that's the view. Book profits if you are sitting on profit, and buy again after some time. The next query is coming in on Dvani International. Sukruta has written in, wants to know your thoughts on Dvani. Has been holding on to it for the last 1 year. Wants to know the target price going forward.
See, currently Devyani is also in a similar trajectory. It is having a lot of consolidation here, and that has been the case for many of the stocks. Though the market seems to be at a high, all the stocks have not really moved well, and this is one such stock. Over the last 4 months, the stock has simply spent time in consolidation, and until a level of 171 is crossed, you are not going to see any improvement here. Well, if you have the capital, you can hold on, but otherwise this stock is set for some more consolidation ahead.
All right, that's the view then. Last query really for the day coming in from Preet Vanam, wants to know your thoughts on Reliance Industries. What are the levels you will be watching out for on this index heavyweight?
Yeah, currently Reliance has been undergoing some correction, and the correction has come into some set of supports right now. So this could be a good time to enter Reliance, and we can see a recovery from here of a target of around 100 to 150 points within the next 1 week. So it's a good time to enter Reliance.
All right, a good time to enter Reliance. That's the view coming in. But with that, we have come to the end of the query segment. Raja, thanks a lot for taking out time and joining in this Friday morning and sharing your thoughts with us. Always a pleasure, and I look forward to interacting with you next Friday again.
Yeah, thank you. Bye.
Thanks a lot. Well, of course, before we leave you, let's take a look at what the market is doing. Extremely volatile, you know, at 9:20, 22, we had given up most of the gains and now we are back in the green. In fact, holding on to that 22,000 mark by the skin of its teeth. Sensex also 250 points higher. The mid-cap index, however, has slipped into the red. In fact, it is staring at a cut of somewhere around 0.8%. The Nifty Bank index, you know, after a flat open, has managed to, you know, clock in gains of somewhere around 100 points or thereabouts. So in fine fettle as of now, but as the day progresses, we'll have to see whether we manage to sustain these 22,000 levels on the index or not. At the current juncture, ITC is the top gainer and BPCL, Axis Bank, Hindustan Unilever. So FMCG stocks rather are doing well and among the top gainers on the index at the current juncture. With that completely timed out on this edition of Opening Bell, of course, have a great trading day and come back and join us at 3:30 p.m. with the market close on closing bell. But for now, it's a goodbye from me. Stay tuned to Money Control for all your other news and updates, and thanks for watching.